Please feel free to, ask any questions. This is a very, let's keep it conversational. And the way I have uh, tried to bring about uh, the content here is more to think in terms of, how does an investor evaluate uh, uh, an AI firm? So, the intent is, if I can leave you with some sort of insight as to how do investors, or how do at least I, forget investors, but at least I am one of the investors, evaluate the AI startup, is what I want to take you off with. And so we'll spend a lot of time on the section B, which is thought process, and then we will talk a little bit about satellite imaging and AI on the edge, which are the other two case studies, how we look on those kind of companies. So I'll jump a bunch of slides. I think you guys saw it in our introduction. Okay, please feel to ask as many questions as you want. A lot of people have asked me how do we invest, right? So, and this is, each investor invests very differently. So when you are talking to different funds, they have different perspectives, there are different peoples inside the fund. But at the end of the day, inside the fund, you will meet a Priyank, you will meet a Tane, right? And each of those people have a different way of decisioning, right? So, and that way of understanding or decisioning might be very different from what you as a founder might think of. And that is what you have to understand. So my framework for investing is basically, these are 5 questions in priority, essentially. Why is this the right team? When you come and pitch to me, why is this the right team? Why is this the right time for this business to exist, essentially, right? Why is this business going to be defensible? And we'll go into deep into each of these. Why is this business going to be big? And finally, the question of truth is, why am I the right investor for this business, right? So this is the 5 framework from my side, and then we'll see how this applies, to AI. One thing I just want to be very clear. As a founder, your job is to talk to as many investors as possible, and you will hear a lot of no's. Not every investor is meant to invest in you. And if you're getting a lot of no's, please don't worry about it. You have to find that one investor who believes in you and gives you money, right? Okay, why is this the right team? So when you are coming and pitching to me, how do I decide, right? So first is, does the team have the passion to solve problems, right? And, it could be 2 ways. So one is, there are people who are just very smart and who just focus on a problem and very clinically analyze it, objectively analyze it, and say, okay, this is the problem to be solved because I think the margins are right, profit pool is there, TAM is there, so let's go and build this problem. The challenge with that approach, and there's nothing wrong with that approach, a lot of big businesses have been built with that approaches, people don't have empathy and passion for the problem. They have not experienced the problem. They have not empathy for the customer. So you're trying to learn outside in. And I just tend to prefer slightly positively for people who have lived the problem, right? So I'll give you an example. So for example, in our portfolio, we have this company called Zenoti, where the founders started off by running a salon business. So they were software engineers and they somehow decided that they want to run a salon. So they ran the salon and they ran 1 or 2 salons. They realized it's very hard to run that business. And they said, why is it very hard? Because there's no automation available in this business. There's no softwares. So they decided to build a software essentially for that particular business. And once they did that, they built probably one of the best softwares you could for that business. And today that business is no longer a spa business, but a software business, and very large, like a unicorn now, right? So you have lived through the problem and you have passion to solve the problem. That gives you some example. Or one of our other companies, the founder's father was running a business, and the founder basically saw all the issues with that business, and he said, I can solve this problem for my father, right? So it might not be your own problem, but it might be somebody who you know very well, and you've seen the problem with them and you know how to solve it, right? So that's the passion for the business. Basically, we're trying to find empathy. Do you know the problem deeply enough or not, right? So, and let's say you purely on research, you find out, but do you know enough depth about the problem where you say, okay, these are the 20 things which need to get solved, or maybe 100 things need to get solved. That is what the first thing is important. Second is basically, does a team have grit to face issues, right? And this is generic. This is not, this is like, I have been a VC for 11 years, and I can tell you no startup is same, but most startups go through a very similar pattern that either things will start off all right because you got money from a VC, and then it will go all downhill from there. Or, you take money from a VC, things are going well, and then at some point of time, things will start going downhill. So the VC curve, it has to go down. There's no two ways about it that you are going to avoid a downhill. So how strong the team is, how has the founder thought about what will happen when shit hits the fan, right? And it will hit the fan, right? So how does the founder think about hiring the team? How has he chosen the co-founders? What kind of support system is he thinking about? What kind of, like, I would ask simple questions like, who are your best friends in startup, or who are the best, like, and that kind of tells you how deeply they've thought about it. So this is the second thing. Does the team have grit to face issues? Third is very important. Does the team have storytelling skills to inspire others? And ideally, this is with the CEO. Okay. If all the founders have the storytelling skills, then that's great. But what a storytelling skill means, see, you have to go sell your company, sell your product to customers. You have to go sell your company to team members who are you going to hire, new recruits. You're going to sell your company to investors to raise capital, right? So storytelling becomes important. And I'll give you an example, right? What is a good founder and a bad founder? So typically what ends up happening in AI, especially, a lot of founders are very, very deeply technical, right? And nothing bad with that, but you have to learn the storytelling skills, right? So what you will see, a very simple example is, they will read whatever is written on the slide. And then, like, even if they are not in the room, it is okay. Like, for example, I am reading from the slide, but I'm explaining the concept behind it. So what most people do is they will write everything on the slide, and then they will read the slide. So it's okay to not even have them there, right? That's not storytelling, right? So you need to be able to inspire others. You need to be able to entertain others. You need to be able to make sure that the audience is engaged. You need to be able to make sure that the people believe in you, because that, at the end of the day, a VC gives money on belief. An employee joins the company on belief. A customer takes your product for trial on belief, right? So how does that belief comes in? That is a very, very, very important skill set, right? And by the way, we have examples, great examples where the product wasn't great, but people raised huge amounts of capital. Like, you must be seeing so many examples in the media last year. You were wondering, scratching your head, how is this company able to raise capital, right? All of those companies are able to raise capital because the founder has cracked the storytelling bit. They're able to tell you, I don't have anything to show you on which to give money today, but you're going to give me money because 2 years later, or 3 years later, a decade later, this is the kind of business which is going to get built. The storytelling is very important skill set, right? Third is, does this team have skills to solve the required problem? Like today, generative AI is hot topic. Stable Diffusion has raised $120 million. Somebody comes to me and says, hey, I'm going to build the next generative AI multi-billion-dollar company. And we all know generative AI requires a certain amount of skill set. You can't be somebody that, I started off last year, I graduated from college, and I just know everything. You have to show your body of work. What do you know about that whole space? Explain, like, have you worked in that space? If you're not worked in that space, then why should I trust you, right? You have to build that credibility about solving the problem, right? This requirement goes down when you are building, let's say, a e-commerce marketplace, right? Then it's probably okay, right? If you're buying and selling something, you have to basically say, I will find something at cheap from here and sell somewhere else. Probably lesser requirement of the skill set, but there's a skill set required. Where will you find the supply of e-commerce products? How will you price it? How will you market it? All of that is very different from an AI company. In AI company, fundamentally, technically, you need to be able to show, this is what I know and understand, right? And that's sometimes the difference. And then finally, you have, what's this team's superpower? Now, let me explain what I mean by superpower. It is, you take any of your companies, and I don't I can vouch for you that whichever company has been selected in ML Elevate, every company will have 3 or 4 other competitors, if not in India, worldwide, right? So you need to win against your competition, right? And what does that mean? It is not going to be from a that superpower could come from product, could come from a great founder, could come from a great sales guy, could come from relationships, could come from being, Amazon is taking you to all over the world, whichever. But you need to think in terms of, this is why if I enter a fight, I have a superpower against others. That is, you have to figure it out, right? It could be deepness of thought. So it's the X factor or Y factor, whichever you call it. And sometimes I'm just coming out of a conversation where the founders had deeply thought about the problem. They had thought about 5, 6 different layers they could answer. I could ask them, okay, how will this business be 1 year from now, 2 years from now, 10 years from now? We were discussing future of e-commerce, for example, and what will work, what will not work. So you could go into a very deep conversation, not just what was on the slides, right? And by the way, see the point C, which is storytelling skills, is you can judge yourself if you are a good storyteller when, as a founder, you don't need slides to be able to communicate what you're trying to build. I think that is very important. Like I could take off this deck and I could just discuss with you. It should feel like that, and you should be able to I should be able to convince you that this is what is important. The reason we have it on slides is simply so that we can have conversation topics, but that's what it is, right? So storytelling comes, you should just practice. Like the best pitches I have seen $100 million raised by a founder in 15 minutes because he didn't use a slide. He basically said, let me explain my business very simply. This is how my business runs. This is how I'm going to make money. And for you to invest money in my business, you just have to assume I am saying I'll have, let's say, 5,000 customers. You have to just tell me whether this 5,000 customers is going to happen or not. Do you believe it or not? Or 5,000 hoga, ki 10,000 hoga, ki 1 million hoga, us pe we can have a debate. But let me just get you through the core, right? So you have to simplify, and storytelling also requires you to simplify. If you get into this conversation that I have this GAN network, uska efficiency itna hai, uski wajah se ye, you just have to simplify a little bit. I think that's the key message there. All right. So this brings us to why the right team. Now let's go to why is this the right time, right? See, when you build a company, you're not building for today, right? Most, on average, companies take a lot of time to scale up and become big. And then a VC invests in a company because it has to be a company built for the decade, right? Now, for example, we can all debate, let's say, Snowflake, right? Whether Snowflake is a great company, good company, whether Snowflake will exist 20 years from now or not, I don't know the answer. But the time Snowflake was built, you could say this technology is emerging and this is going to be here for next 15 years. And in that 15 years, a very big business can be built. That question needs to get answered, right? So there are certain trends. And as a VC, I look at the trends and I've really dumbed it down to what are the today's big trends in AI. And my knowledge might not be as relevant as your latest as yours, but you take, for example, a trend of AI complexity. AI is getting more and more complex, right? So what does that mean, right? What are the trends come out of it? So we had obviously auto ML, ML explanation software is coming up, right? That's a trend. And is it going to go away? I don't think it is going to go away, right? So should we invest in a company behind that? Now, the second trend is shortage of AI skills. Not everybody is going to get an AI engineer. Not everybody has a data scientist. Not everybody can hire people like that, right? So what does that mean, right? So just like you have no-code tools which have come about because of developer shortage, no-code AI tools, which could be business analytics tools, a lot of complex things are like Stable Diffusion is a great example of that, right? It's essentially a no-code AI tool. It solves the business problem without somebody knowing what the underlying AI is. You and I can be interested about, okay, they use LDM and others, but the average user is not interested about it. It solves an interesting problem for them, right? Second is AI is upskilling ed tech, right? So you can have courses, you can have all sorts of things. These are examples of which can come out, right? AI in production, right? So ML ops, data engineering, like these are big problems which are going to continue as more and more people use AI. And I mean, I'm not talking something new, but so these are just examples of things which will last for 10 years or longer, right? That is what, though you don't want to invest in behind fads. And I'm just trying to see where, so for example, let's take the case of, let's say, Clubhouse, social commerce, social network, which is based on audio, very like, obviously people gave their money assuming somebody, I have the benefit of retrospective thing, but somebody gave the money assuming it's going to be there for next 20 years. Somebody was thinking it'll become the next Facebook, right? But is it a touch and go? Does it require a lot of change in customer behavior, consumer behavior? I think that's where it gets tricky. So all investments are correct, but you have to think about your business, and you have to be very confident that this is going to survive for next 10, 20 years. And you should be able to communicate that to the investor, right? It's not just that you believe. So a lot of times what happens is, founders come to us and say, why are you not understanding this? This is going to happen, right? Please understand there's a lot of, I am not as educated in AI as you guys are. I am not a data scientist. I am not you have to come and convince me that you have to almost take the effort. And this is why fundraising is hard, because you must be saying, yeah, I'm having the stupid conversations with all the investors. Of course, you're going to have a stupid conversation because the guy in front of you is not an expert, right? So some of the times you have conversations with experts, which is great, which is like if, let's say, one of the funds already has somebody who worked in AI, they might have a very deep conversation with you, right? But don't forget, at the end of the day, you have to answer this question: on what truth is your company built? And that truth should be long lasting. So the rules of the game should not change midway through your company. And then imagine somebody building conversational chatbots, and GPT-3 was not there, for example, right? Now GPT-3 came in and suddenly everything changed, right? So that guy must have built hard, about a lot of effort in building that chatbot, and then suddenly things change for them, right? So why is the right time is important, right? Okay, why is this actually, yeah, this brings to why is this business defensible, right? So AI businesses typically have moats from, then this is my knowledge again, 3-4 things. So you either have proprietary data, so you are using a same algorithm as everybody else, but you're training them on a much better data, or you have better models, which is typically the race right now. So everybody's saying my recommender systems model is better than yours. Third is seamless integration with business processes. So either you're building something which is pure raw AI model, but the better you are able to extract value by building workflows around it, a better software where people can use that, because AI is the end to the AI itself is wrong. I mean, we'll discuss that, but so AI has to add some business value. So the more you are able to make business users use it, the more value you can extract out of it. That's another defensibility. And then finally, of course, like how quickly network effects which can generate more and more data to improve models faster, right? This is a very simplistic view, but at least for me, these are the 4 more important things in the whole business, right? And if you go dig one level further, I look at AI businesses, who are the different users. AI business can be very innovation led. On the left end, you have like very, very deep innovation. So you're building new models, you're building new toolkits, GPT-3, LDM, all the like. And on the right end, it's like business applications, right? So machine learning toolkits, of course, a big, multi-billion-dollar business can be built on that. Let's say you build ML infrastructure, you're building the next Snowflake for AI, things like that, right? So that all sits there, like core fundamental innovation, very hard to monetize, also very hard to create. And if you create something very unique, it can last for a long time. But typically, very hard, like very, very, I don't have very great examples of technologies like Java, a lot of things were built, Python, everything. But very difficult to see how to monetize it though. As you will see, because that's a building block. Building block monetization will only become a building block by definition has to be widely adopted. If it has to be extremely widely adopted, you will never find people paying for it, right? So that's why like OpenAI letting GPT-3 out in the wild because now they will have to build things on top of it, right? So then you go next, then you start saying, okay, this toolkit has to be used somewhere. And then you start building things on top of that. Now we are talking about how to make things easier for data scientists and data engineers to use. Then somebody will say, okay, let me create APIs on top of it. It becomes even easier. So more widespread, because then more number of developers a developer can just call an API to say, okay, stable diffusion, give me an image, right? Or do copyright karke, jaise, India mein, I think pepper content, for example, is a good example, right? Just call an API, you get some data output of the AI, right? Then you go even further, right? So you're now starting to create AI applications for business use case.
Hey, Priyank, just was listening to your take on the team, right? The founding team, and I was wondering, there's a lot of talk nowadays about red flags and some decisions that in hindsight could have been made better, right? So how are some of those genuine mistakes? At least whenever a founder is trying to make a decision, at that point, it's kind of like a genuine error. What kind of mistakes would be, could be deemed as benefit of doubt types category versus clear red flags? Of course, when an investor invests in somebody, I'm sure there would be some sort of a pro versus con kind of a list. But how does a VC typically perceive that? Based on your decade of experience, something that's a bit directional, right? With AI ML companies, I can speak about my space. I mean, in sales tech, there's a lot of crowded. The space in sales tech is quite crowded around sales intelligence and a lot of stuff happening on white, right? So it's very difficult to distinguish between different companies, and everyone is trying to differentiate in very subtle ways, and decisions that you take big impact on where you could be not even 5 years later, but even 2-3 years later. So
and sorry, this is after investment or before investment?
I would say after investment, right?
Okay.
Yeah.
See, okay. So see, after investment is very easy. After investment is, typically if the founder has done something, it would have done in consultation with the investor. So the investor is like, it won't be the founder is saying, boss, I'm going to do this. I will not even take, how you do make that decision. So there are two ways. If you're inclusive, if you tell the investor, boss, I am doing this, what is your view? Do you agree, not agree? And then the investor comes back either with a strong yes, so then he's a co-conspirator with you. Then he's done the mistake along with you, and he should own up to it. And right. The second one is basically when you basically tell the investor is saying, don't do this. And you basically say, right, that's again is a moment of truth, right? So for example, we tell our founders here, we don't know everything. You are closest to the subject area. You are right. You made a call. The repercussions of the call is, let's say you spent money, time, all of that. You're now short on cash, right? I as a founder, then it becomes down to the relationship with the founder and the investor. Okay, I believe this guy did one mistake, and he let him do whatever. Us time, if you need more capital, then it becomes a big debate. That okay, I need more money from you. I have done one mistake, but I will not repeat this mistake. That is a moment of truth and belief, right? Okay, this founder will not do this. I think the mistakes that are non-negotiable are the ethical ones. I think you get negative feedback from the team. You get all of there's something wrong in the company. I think those are non-negotiable mistakes where at least I would immediately break off my relationship with the founder and say, boss, no more money from us. Thank you for being, but we are not going to be journey longer with you. I think the most common mistakes obviously are this overhiring, right? So as a VC, and I've been part of boards where last year everything was going great, money was there in the bank, revenues are going up. We go and tell the founders, please raise, you have raised money, now scale, hire people. And then what happens is market demand falls off. It's market conditions, and you could call it a mistake, you could call it we overhired, but it has you are responding to the market, and nobody's going to blame the founder for it, because again the decision was made together, right? So I think that I'll tell you, in sales intelligence or sales tech space, the kind of discussions I have had, like you had a very good example, which is companies have to differentiate. So like Zoom Info, which is the big daddy in sales intelligence, right? Has a lot of people, has a lot of sales team, has hired data scientists. And when companies come in that space and say, I want to differentiate against them, people have to first decide, for example, am I building for a small business mid business or large business. And that decisioning is a very, very big decision, right? Because you're saying, if I am going to build for large business, you're taking ZoomInfo head on. So now at that point, a lot of debate should go along with investors as to how did you come to that point? Like, how do you make that choice? How that choice is very important. And then how do you, let's say you decide, okay, we understand it's going to be hard, so we will do mid tier. Now in mid tier, I can follow the same playbook as other SaaS businesses, which is set up a team which is going to sell a product. Or let me do something innovative. Let me create like a Chrome plugin for sales guys. When they log on to a website, they will say, these are the 5 people you need to talk to in this company, right? So now that is something unique and interesting. I, as an investor, don't know how will you sell in the market. You as a founder don't know. You have an idea, but whether it will fly in the market. So that will only get to know by learning, by doing an experiment, right? And it's not also the small experiment. You'll have to dedicate significant engineering bandwidth for it. So some money will go, right? So at that time, planning comes into picture. Why are we doing it? What is this product definition? What we expect out of it? And it has to be a bounded experiment. Let's say I'll build it. How much after 2 quarters? If it is not yielding results, I would call it off. Okay. But I should also tell you, this is very easy to say it like this. In practicality, ऐसा नहीं होता है, right? So, but you have to have some plan when you're investing into a resource. When you're spending capital, you need to have a plan. That's what I'm broadly saying. And that plan should be debated and discussed with the investors.
Okay, and if I may take the luxury, like what would be the same version for this pre-investment? Any quick thoughts there?
Yeah, I think pre-investment, unfortunately, tide is against the founders. So if I am an investor and I look at your company, let's say you raise some money, the company has been in existence for 3-4 years, it has not gone anywhere, and now you come and say, I want to raise capital. You have to overcome the baggage. कि यार अभी तक कुछ क्यों नहीं हुआ, right? And then it comes down to again the whole conversation of that, how are you able to storytell and how are you able to sell? So the odds are stacked against you because there will be a bias. The founder had money and capital and he was not able to build a big business. So why will he be able to do it now? That's the challenge.
Got it. Super helpful. That's great.
Yeah. Okay. So let's go again. So basically what happens is this also. Defensibility decreases as you move towards the right axis. When you build a business application, it can be like fundamental technology of a machine learning toolkit. You are not going to see significant disruption every year. You're not going to, there'll be improvements, but delta, like step up improvements happen more on the right side. More and more people will take the same technology, build a better product, because building a simpler product is easier. Doing fundamental AI innovation is harder, right? So defensibility is better on the left side, but on the right side, disruption happens faster. But market adoption also happens much faster on the right side, right? So that's why this is just a thing to keep in mind. So we have covered why is the right team. We've covered, why. So just to recap, this is why is this the right time? Decadal. Why is this a business defensible? Now you have to also think, why is this going to be big? So I have to think like I am a VC. I sit in a large fund. So why is it going to be big, right? So you have companies which find enduring trend in a defensible mode, right? But uske baad bhi things nahi bada. There are two things. Either you have to take an existing large market, so you already know that money is being spent in this market, and then you take out money from it, and it's very clear that you are a much better product which is serving the existing market, like sales intelligence. Just take that. ZoomInfo is a great product. I think at peak it was like a 50 billion company. They were rating a lot of money on it, right? Now, so money is being spent. A lot of people are spending money on it, right? Now, how do you enter that market, right? So market question goes away there. The market bada hai. Now your approach will decide whether you are going to make it big or not. The second big thing is category defining businesses. And this is very hard, right? So like another founder asking me, you are telling me I need to have revenues, I need to have all of this, but Stable Diffusion got $100 million. What are you talking? They have zero revenue and they are building images, fun images. So Priyank, like all of this PPT is trash, right? You're giving some VC gyan, right? And this is the challenge. So somebody at some point, some VC would have decided, well, this is going to be category defining. This is how future ke andar all images are going to get created. And that is a story which has been sold by Stable Diffusion, right? So it is hard to sell a completely new category defining business when there is no analog available, no analogy available for that, for your business in the current market. It's extremely hard. Imagine the first guy who came in and said, I'll create AI chatbots. He has to really convince somebody, right? But once it became 4, then the next 4th, 5th, 6th company to raise capital, it becomes easier because everybody understands what AI chatbots are. Now you're basically saying, I'm going to help you improve creating AI chatbots faster. But what all this means, right? This is all hocus pocus. I think if you want to step away, the objective question I ask myself when I evaluate companies is, will this company get to $100 million of revenue? What does it take to get to $100 million of revenue? And you can ask that question for yourself. If you are creating a product, let's say most Indian SaaS businesses, they say, okay, we will charge 20,000 rupees per month from customers. So I'm going to get 2.4 lakh rupees. That's like a $3,000, AOV. So by selling $3,000 per month, per year, you have to generate $300 million of revenue. That's like 30,000 customers or more, 33,000 customers. Will you be able to find so many SaaS customers, enterprise customers in India or SaaS businesses? Is that, so you just do first that, I'm sure a lot of you must be aware of the analogy of rats, rabbits, elephants, right? Or should I get like 100 customers who will pay me $1 million, right? So you need to understand that business. And then what we will do is we'll say, okay, you're saying, let's say you take the case of I'll have 100 customers who will pay me $1 million. So somebody to spend $1 million on you needs to be like a Fortune 500 company or a Fortune 1000 or 10,000 company, for example. Are they even willing to spend time and money on this kind of a product? We can just go and ask like 10 CTOs or 10 founders or 10 CEOs of those companies, is this a problem for you? That is how a VC firm evaluates whether this makes sense or not, right? So that is one way to look at it, right? So just be aware of that, right? So, but objective question is, if you come back and say, if I feel $100 million is not possible, then already it's breaking. It's not. It might still be a good business for a founder for you, but for a VC, for me, it might not be. For smaller funds, it might be, but not for me, right? Okay. Then this comes to this question of, why am I the right investor for this business? I am being slightly, you should ask this question in your mind for the investor you're pitching to, right? Can I help this company connect with the best talent? Can I help this company retain talent, right? And these two are generic sometimes. But for example, if you want to hire a chief data scientist, right? There might be the people who might have much deeper networks than me, right? So day one, you are at an advantage if you take money from that guy, because within 24 hours of receiving money or signing a term sheet, he will introduce like 5 people who can dramatically change your company's outcome, right? Instead of waiting for 1 year, right? Ability to connect with customers. So for example, large funds like Axel are at a benefit here, because like we do this exercise of mapping, these are the companies which Axel has, and we can introduce you to, like, let's say 10 customers by directly mailing the CEOs, and so that your short sales cycle shortens, right? So we have, if Axel in India has 177, 180 companies, you can just, I can sit down with you and say, your product is applicable here, here, here. Let me do the introductions. Immediately you get very quick, short lead cycles, warm leads, right? Ability to raise help funding for the company, right? So, you want to get introductions to large funds, Axel has a strong brand name. If you're Axel funded company, people will look at you more seriously, take you more seriously. We can just shoot an email to some of the people and they will take a meeting with you. Those kind of things and benefit, right? For example, but for me, for example, if you are let's say a crypto company, I don't know any crypto funds because I don't invest in that sector. So I might not be the right person for you. But I know, for example, SaaS, who are the best people, AI, who are the best people, I can do that. And then do I understand, finally, is key priorities for the company. Do I understand the business well enough do understand the technology well enough to be able to pinpoint to you, this is what is important. Like suppose you are a AI company and you go and take money from a VC, you typically invest in consumer brands. You will get the money, maybe you'll get the connect, maybe you get point A, B, and C, right? But what about point E? Like, does he even understand what you're talking, right? And does he understand what kind of customers you need? All of those. So all these three things are important for me as well, and that's why, if I'm just going to give you money and sit on your cap table and do nothing, right, where I can't help you, guide you, I don't want to be part of those companies, right? So, and you should apply the same test to your investors. And if you have this choice between two investors, and we see this very often, there are investors who are going to give you a company sometimes 30-40% more valuation or 50% more valuation. As a founder, you have to make a choice. Who should I go with, right? And this becomes I would say this is I recommend my founders when they go fundraising after us, please decide based on this, right? By the way, all of this is out of in today's market. My advice to you is, if you are getting money, don't test investors, just take the money, right? So don't be very nuanced about it. And so that's the market reality, right? So this is why am I the right investor? So with KCT, we have been evaluating a bunch of spaces that excel. One of the spaces which has emerged because of AI and the confluence of small scale satellites over the last, let's say, last decade or so, is satellite imaging, right? So the enduring trend is essentially rockets are becoming smaller and smaller. It's easier to launch a rocket. You must have seen a lot of Indian space startups are happening, so that is not going away. And so the cost of launching satellites is becoming smaller and smaller. So lots of satellites are going to go up. So raw material for imaging is increasing. What has not happened right now is the second enduring trend, which is when you have to beam like a gigabyte of data or a petabyte of data from space to Earth, it still takes a lot of time, but it is starting to improve. As more satellites go up, more and more bandwidth is going to get added to the ground stations, right? Now, what this will create is at an inflection point, huge number of satellites, huge number of data sets are going to get created from space, which are typically images. Now, interestingly, these images are also of different types. So you will have your RGB images, you will have your hyperspectral images, thermal images, and maybe others. I'm not very conversant with optics, but more and more different types of optical image data sets are going to get created. And what all can we do with this? And all of us know the prime example of looking at economic activity by counting number of cars parked in a garage for a store, or looking at number of trucks going in and out. But there are a lot of other things which can come about it, right? So this is the problem to be solved, and it looks like an interesting problem, right? The question then is, which problem to attack, right? So which industry? So we have to find revenue pool. Like for example, we are evaluating a company. Now, let's say they are in disaster management, and who pays for disaster management? So disaster management is paid for either by the government or by private corporations who have, let's say, some factory fire and things like that. And by the way, for example, we have invested in a company, I think Ripik is part of this cohort, and bunch of Detect Technologies also. Detect is, for example, what they do is they actually look at all the video feeds across a plant and try to predict, is there going to be a industrial accident going to happen? A worker falling off a window, or somebody walking by without a helmet, and something falling on their head. So they try to predict these and try to avoid. Now it's not satellite imaging, but I'm giving an example of AI which is being used in industrial setup, and people are willing to pay for it, right? How much people are willing to pay for it is the question which we as VCs, when we invest, try to find an answer for, right? So is a factory location going to spend 1 lakh rupee per month, 2 lakh rupees per month, 10,000 rupees per month? So that kind of analysis we need to do. But it's interesting. So that's an example of where we are looking to invest, for example, and trying to find what kind of problems to be solved for. Another one, which is going to be a big and huge segment, is going to be AI on the edge. I have not found too many companies in this space. But as more and more smart devices, as more and more drones, autonomous vehicles, industrial IoT, essentially as more and all of these are created, all of them will require some sort of AI which exists and runs on the chip at the edge. Right? You have 5G data connectivity. Now, the problem with this is with AI models today is they consume a lot of power, they require a lot of data, so all the compute has to happen on the edge, right? So power is low, so it could be fundamental. This could be a more fundamental investment where investing in chips which give extremely high compute on the edge, energy efficient AI. So you have to run the AI inside the chip. So it could be models and algorithms which are much more efficient than everything else. And then, or it could simply be, let's say, investing in systems which have very high, which have very low latency in response, right? So you are sending at the end of the day, you transmit a lot of data. Let's say 5G becomes pervasive, data is transmitted, but at the end of the day, you get back very quickly. So this is a slightly more very early thing which will happen over the next few years, right? And the classic example of this is you're driving a Tesla and Tesla has to respond immediately, right? So everything is on you can't expect the Tesla to transmit all the video all the way back to Tesla headquarters, and then it comes back and says, okay, the dog which is going to hit your car in 1 second, I'll take 3 seconds to respond. So that is the prime use case over there, right? So these are two examples, for example, how we think about, and it might not be cutting edge, but we also learn by reading a lot of literature, looking at all the different technology disruptions which are happening. So this is what I had. I'm happy to take any questions.
Hi, Prank. So this question is about the satellite image data. So you mentioned that creating the data sets and using them for different applications. But like, have you guys thought about the dataset creation part itself? Because for satellite images, you need to like label each and every object in each and every satellite image, right? So
Yeah.
is that like something that you guys have thought about, or does that space look anything exciting to you guys where a disruption can happen?
Yeah, so AI data labeling or training data, labeling data for training is definitely a big space. Axel has invested in this company called Scale.ai, which basically does something like that. And their first few customers were all auto companies. And how Scale achieved was they will take a lot of images and then they will train. I mean, they actually had manual people labeling everything, right? And obviously now we are moving towards synthetic data as well, right? So that's another interesting space. We are digging into it and trying to understand how to think about it. I mean, I am more interested right now on, I mean, there are so many, but synthetic data, like cyber security, for example, is a very interesting.
By the way, Brian, that's what AuraML does.
Yeah, we are in like building a synthetic data company actually. Yeah.
Correct. Yeah. Awesome. So yeah.
I hope that answers my question. Yeah.
Hi, Prank. This is Sarvesh from Neural. So yeah, I mean, I think you talked about AI on edge, which kind of intrigued me a lot because we are specifically doing what you are trying to, or what you mentioned, right? So, like for example, you talked about disruptive technologies. You talked about like revenue, right? So what I'm trying to get at is like having this disruptive technologies coming into picture and start up building something out of it. There will or revenue cycles might be very, very high for those kinds of disruptive technology, as you know, right? So how do you take those kinds of startup and like how do you evaluate those kinds of technologies which you feel that yes, it is coming up. Yes, you feel that there is a team who can build it, and there is a technology which can be leveraged, right? But revenue might be few years down the line. What is your take on that?
Yeah, I think okay, it's hard as a founder and as an investor also. I think people do get funding like that. We have funded a lot of companies, okay, or not a lot. We have funded some companies where revenue is a long time away. Like so the classic example is ChargeBee and CleverTap. You know, ChargeBee founders for the first 4 years had zero revenue. CleverTap was building like a real-time database to do analytics, and it just took like 3.5, 4 years to just build a database before they could actually go and sell also. I think for that, you need to find the right VC partner who understands this and who is comfortable with that. Not every VC is very comfortable with it. Because a lot of times, a lot of VCs are impatient, right? They want the company to grow big. So I think that in those situations, what I would recommend is be very clear on what are the how do you demonstrate company progressing. Like, okay, this is how you can measure my company as a progress. Because sometimes you need, if a VC doesn't come from that space, you have to understand how to make sure that how will they judge your company, right? So you can't say, my revenue, revenue fine. You're saying no revenue, but how they need to understand how to judge your product, right? So you have to be able to articulate that. Okay, this is how you can see progress in my company happening, and that is definitely the job of the founder. That you should be able to explain that. So.
Okay, all right. Thanks.
Yeah, I have a question, another one.
Yeah.
So I just actually entered that on the chat as well. So there's a lot of established tools that we often hear when it comes to B2B SaaS, Priyank, like don't waste any time and just directly start selling to the US, considering that for a lot of the companies the actual monetization potential is there. Another common one is just try and focus a lot more on inbound or PLG led growth. But specifically with regards to Indian deep tech AI/ML type startups that we have in this cohort, what are your personal thoughts, comments, any anecdotes that you would like to share? That we should kind of learn from, anything that we should consider on top of those universal statements or broader statements.
So I ascribe to the first universal statement which you mentioned, that don't waste time and sell to the US. And fundamentally, it's not sell to the US, it's not go as close to the customer as possible. A lot of times, see, core AI is fine when you're building with that's applicable everywhere universally. But the moment you go into building any kind of business product, the way Indian customers behave and the way international customers behave is very different, right? So you need to be. That's why it's just better to be closer to the customer so that you don't have that iteration. A lot of companies are sell in India, they will sell for 1 year, they will get some revenue. When they go to the US, they realize it's not relevant, right? And that's the challenge, right? Unfortunately, our ecosystems have not evolved to the stage. So there are some companies, Yellow, I think Darwin Box, CleverTap, bunch of others, which have got to $60-70 million of revenue by selling in Asia and Southeast Asia, which is great, right? But they still don't get still don't get valuations which are compared to the US market, right? Simply because at the end of the day, very high valuation, you want a US investor to put in, and the US investor will say, you're telling me you're selling to Tata, but I don't know who Tata is. If you're selling to, if you're selling to Ford Motors, I know who Ford Motors is, and I can call up and ask them how to you good or bad, right? So that's where the discrepancy happens, right? So that is one where purely from valuation perspective, simply because it's easier to become diligence when you are closer to. Second is product, right? If you're building a great product, it becomes easy to be close to the customer. And third is markets. Indian markets tend to be your companies 50, 60, 70 million pe jaake atak jati hain, companies, but the US markets are deeper. Or you can be global, whichever way. So I mean that is one aspect. So especially for SaaS and technology companies, I think India people don't pay as much. Coming to a second point, which is PLG or inbound rules, I think you have to be very careful. It's easy to say PLG rules, but not every company is built for PLG, right? Yeah. The moment you say PLG, you need to have self-serve mode, you need to have payment setup, you need to be able to, customer success has to be right, bunch of things. So you need to understand what applies to you. So not everything is applicable, but the sell to US or sell to your customers, like agar 100 million ka revenue nikalna hai na, do that math, who will get you 100 million? That will tell you who the customer is going to be. And you build those hypotheses. If you're getting to 100 million in India, great, then validate it as soon as possible. Right?
That helps. Thanks.
Yeah. Hey, Frank. This is Jaydeep from Downtown. I also posted the question on the chat. We are not a SaaS company where we are selling AI as a service to customers, but our product, which is a marketplace, which is far better in terms of as an experience, and as well as while onboarding brands and products, we are much faster and much more nimble because of AI. So how do you evaluate those kinds of businesses compared to a typical SaaS business, which is selling AI as a service?
Yeah, I think a lot of businesses are coming where AI is a competitive advantage. And, for example, if you're an e-commerce business, it will show up in your conversion rates. It will show up in recommendation. It will show up in AOVs. So, and then it could be as simple as that. So what is relevant for that business is what you will be evaluated on. Like similar, taking, let's say, the sales tech example. In sales tech, if you're competing against Zoom Info, the customers compare you against, I am buying from you, why should I buy from Zoom Info? And they calculate this cost of, let's say all of you founders will spend money to buy leads. So conversion of that lead, whichever company is giving you better, you start spending more money with them, as simple as that. And that company which is giving you better leads might be using AI to refine the contact numbers, removing junk numbers, all of that, right? Whether they use AI or manual, but that is an example. So it will be evaluated on that basis. I might not understand what AI they are using, but if the customer comes back and tells me I use Zoom Info, it costs me $10 for a lead, and this company is giving it to me in $5, I understand, right? And then I go and ask the founder, hey, how are you doing this? And the founder says, I'm using a better AI engine. Like, fine, okay, explain that to me. So that makes sense. So I would evaluate it that way. Again, and by the way, you have to communicate that, right? You have to communicate it to the investor again.
This is Roshan.
Hey,
Yeah.
Roshan.
So Priyank, so we are into a space where we are trying to develop achieve level 4 autonomy in drone flights, like the autonomous drone flights. That's what we're trying. So what we understood after working in this space for about a year now, the tech stack that we're developing is good, fine, sounds good, sounds great. But somewhere or other, like the example you gave about the Tesla, right? It needs to send the data all the way back to the office and it gets back from there. But I understood that in order to do it on the edge, we are limited by the hardware capabilities that exist in the industry. The hardware is not there yet. So how do you see this problem, as in, like, should the company try to get into the hardware space or just stay in the software and probably wait for the right time? Or what's your VC take on this?
Yeah, VC take is you're ahead of your time, and
Okay.
so I would like, so there are some VCs who invest in hardware startups. I am not one of those, because hardware has this problem of you invest a lot of money in inventory, and then it gets outdated and that inventory can't be used anymore. So I'm not one of those. So if you were to come to me, I would say let's wait to see when the hardware or processing power catches up. But if the other part is the processing power is also obviously moves at Moore's law, right? So if it catches up within the, let's say, next 1 year, 1.5 years, and all of that, that's great, right? So that I have to be convinced on that. Two, you need to come with, I have partnerships with these 2-3 companies. See your drone company, which uses a chipset which allows your AI model to run, and then you, right? So I like you. That's the first condition. Then which chipset company are you working with? So to work this, and then are there enough? So you need to stitch up the other parts of the business. So which gives belief that ठीक है, अभी hardware पहुंचा नहीं है वहाँ पे, लेकिन the moment it works, he already has lined up these 5-6 customers who will immediately use them because they see value in this, right? They've done some sort of evaluation. So I think that's the way you generate belief in the investors.
Okay, got it. Yeah, that helps. Thank you.
All right.
So thanks a lot, Priyank and Dane, for the session and for the candid advice.
All right. Thank you, guys. Bye.
Bye-bye. Thanks, Priyank.